All right, welcome to the day two of this YouTube training. Um, in the last teaching, we talked about the basics of market structure. All right, um, I talked about the key elements, right? How to identify a bullish market, how to identify a bearish market, and the rules that govern a protected high and a protected low. All right, so if you haven't watched the video, do how to use the playlist link. All right, so I'll be dropping the playlist link to the videos in the description so they can have just the link so you can watch others, right? So don't need to stress yourself. So just use the playlist link I'll be giving you guys in the comment section so you can just have access to other ones. All right. Now, also remember that everything that is being said on this channel is for educational purposes, right? So, what is expected of you now? Let's talk about this briefly. Just a little. I told you guys that we'll talk about psychology, right? Now, this is what I always tell my paid students, right? The ones that paid to be part of my academy. We have a free YouTube channel, and we also have a paid mentorship group. All right. So what I always tell the guys in the paid mentorship is that whenever something is taught to you, right? Whenever maybe you come across any information that is trading related, what is expected of you is to do what? To verify and backtest, right? Now, let me just talk a bit about this because this is very, very crucial. When somebody teaches you maybe a strategy or maybe a kind of particular setup, right? What you do is to simply go to your own charts, right, and verify. Okay, the person said that. Okay, for instance, now the person said that if the market comes to another block, it should reject from the other block, and then continue moving, right? So let's assume that maybe I give you maybe an order block setup now. Okay, I say that the last up candle is an order block, and then you can extend it in the future and then look for sales there. Now, okay, I've told you that this is what an order block looks like, right? What you should do is to go to your charts, open your trading view or your MetaTrader or Match Trader or whatever you use, and then study, is this thing correct or is it wrong? Is this thing reliable or is this something that is not reliable? If you do this, you will see that many of your trading struggles will come to an end. But the issue with many traders is that when something is taught to them, they just go and start trading its life. Like one person I just touched this on other block, they just open their accounts, live accounts, and begin to trade it like that. They won't even check if it's actually working or not. They won't even do a back test. They won't even study it on their own. They just copy it. Okay, when they just see the market doing this, you can sell and then they will take a loss and then they will start blaming the mentor, right? That's not how it's supposed to be. Whenever information comes your way, what you're supposed to do as a trader, right, or as a student is to verify and backtest. Now, why am I saying this? I'm saying it so that you can, whatever we are teaching you here is strictly for educational purposes, right? At no point am I giving you financial advice, right? I'm not a financial consultant and all of others. So just a disclaimer for you guys, right? Whenever we are giving it just for educate you, right? So educate you, that is all. We're not asking you to go and trade live, right? So you're not asking to go and open, buy a prep account and then start, trading this, right? We're asking you to do what? Verify and backtest. Okay, if you verify and okay, you're convinced, okay, I am sure this thing is correct, then you can trade it on your life account. But at no point are we encouraging you, right? Even my patients, I never tell anyone to, trade life, right? I never ask anyone to deposit money in a broker. I don't do that. I never say, okay, you're ready to trade life. Even some students come to ask me, should I trade life? I tell them, it's up to you. Have you finished back testing? Are you confident that you want to continue, you want to start trading life? Because I'm doing that to avoid the issue of blames, right? Someone go and blow his account and then come and say that I'm the one that gave him the go ahead to destroy himself, right? Trading is very, very risky, carries a high level of risk, meaning that you could lose all your funds, right? So it's always best you use wisdom, you use discretion. Whenever something is taught to you, use your own IQ by going to the chart to back test it, study it, and then if you're confident with your study and back testing, then you cannot go live. And when you go live, remember it is still your responsibility, right? So that is by the way. Now let's talk more about trading ranges, right? We're still on advanced market structure, right? So say advanced market structure. Let's talk about a bit about ranges. All right. Then we'll talk about premium and discount levels, right? All right. So this is very important. Now, this is a very important topic because if you don't understand this, you'll be buying or selling in a wrong place. Now, a trading range can be defined as the distance between the last low, right? Let us just type it out. So a trading range can be defined as, a trading range can be defined as what? The distance, right? Between what? Between the last protected, no, let's put it like this. Is distance between the last dynamic low and high, right? So is that the distance between the last dynamic? Why is it dynamic? Because I mean, for instance, if you have a bullish market, right, I see price, do this and then move very impulsively, right? This now becomes your swing low. Why is it dynamic? Because price give a strong push away from this low. So now the distance between this low and this high is what we refer as what? The trading range. So you can simply, mark this your range high and this is what? Your range low, right? So the distance between the high and the low, it doesn't matter whether it's bullish or bearish, right? So this is what we call the range high, right? You must type that in just at the left or center. Let's put it to the center. So I can say okay, range what? High. All right, so you have gotten your range high now. So what is the next thing you have to do? You have to locate what? Your range low. All these things will make sense very soon, right? So I have what? The range what? Low, right? So now we have your range high and range low, right? So this should be at the middle as well. So now you have your range high and then your range low, right? You have your range high and range low, right? So now, what is the importance of this? Now, when you have identified your range high and your range low, the importance of this is that you want to know the premium and discount level. So what do I mean by premium or discount level? Simply do what? Bring out either your FIB2, can bring out your FIB2 and draw from the swing high. If it's bullish, you take it from the swing low to the swing high, right? So take it from the swing low to the swing high. If you're bullish, swing low to swing high, right? Meanwhile, if you're bearish, you're taking that from what? If the market is bearish now, you can say okay, from the swing high to the swing low, right? Or range high to range low. So it depends on the market. So if it's bearish now, you do the opposite. So you simply draw a 50 from this high down to the low. So can you see the positioning? If you're bullish, you take it from the low to the high. But if you're bearish, take it from what? The high to what? The low, right? That's how you do it. So now, when you do this, you want to mark out what? The 50%. That is the important. And that 50% is what we refer to as what? Equilibrium. I want you guys to follow me carefully. So this 50% what we refer to as what? Equilibrium. That is the midpoint. I can say midpoint, right? So now you have an equilibrium, right? So now, what is the importance of this 50%? Now, when the market is bullish, you want to be looking for buys in where you buy what? At discount, or you sell at what? Premium. Now, what is the meaning of discount and premium? What does this thing really mean? What do we mean by discount? What do we mean by premium? What's the importance of this? No problem. A discount level is a level, right, between 50% to 100. That is, when we are talking about discount, we are referring to what? 50 to 100, right? What's referred to as discount? 50% to 100%, right? 50% to 100. So if you are bullish, you want to buy a market, you want to buy the market what? At between 50 to 100, right? You're not trying to buy it. You're not trying to catch a buy at this top here. So people will be like, okay, this is broken support, sorry, broken resistance, so they will have to buy. No, you wait for price to come what? Towards a discount level, right? And then you look for your buy opportunities there. maybe a kind of break of structure, and then you take price higher, right? So this is what you're doing as a smart-minded trader, right? Now, if you're bearish, remember, it's the opposite. If you're bearish, you want to sell, what do? You take care of Fibonacci 2, you draw from swing high down to swing low. So it takes on FIB 2. So you can use FIB 2, or you can use your Gann box. So Gann box is this. So Gann box looks like. You can also use your Gann box and then get your 50% level, right? So when you have done that, what do you do next? You look out for what? You mark what? 50 to 0, right? I think I placed this wrongly. I think it should be the other way around. I think I should place it this other way around. Yeah. So one should always be at the top. So you're targeting what? 0.5 to 1, right? I'm calling this 50 because 0.5, this is 50%. So 50% of 0.5, right? If you divide 50 by 100, is 0.5. So this is a decimal place. Why this is a full number? So 50% is also the same as 0.5. Well, this 50% is the same as 0.5 because if you divide that 50 by 100 is 0.5. So it's either you say 50% or 0.5, right? 0.5 fib level. So don't mind me, don't mind my English. So now you mark this, right? So what are you doing? You're looking for what? Cells inside what? Your what? Premium. So remember what I told you guys. Premium is for what? Cells, right? All right. Why discount is for what? Buys. Very, very simple strategy. Very simple. Very, very simple. Right. So this is a discount level and it's for what? Buys. So this is exactly what you should be doing as a smart money-minded trader. All right. So this is the second part of the giveaway. I will awarding winners randomly on the third day. So if you have participated in the first one, no problem. Just participate in this one, and then the third one will now pick winners and then award them with data for now, right? Then we will go over to account and other things, right? So this is the most important thing in this information here is the whole point of this teaching. Buy at discount, sell at premium. That is the most important part of this teaching. If you can understand this, you're going to save yourself a lot of trouble. Now, some might be asking me, okay, sir, I understand all these things. Now, which trading range should I use? What time frame should I use on my range? Now, notice one of the best time frames to identify a trading range is for the 4-hour charts because it gives you a picture from the higher time frame and also the lower time frame too. So for me, I believe that one of the best time frames to identify a trading range is a 4-hour or 1 hour, right? Okay, just say 4-hour, right? This is one of the best time frames to identify a range because 4-hour is close to daily and 4 hours also close to intraday, right? So it's kind of in between intraday chart and then daily. Like you swing traders can use it, right? If you're a swing trader, maybe you hold trades for a long time, right? You can use 4-hour for your range. If you're a lower time frame trader, maybe you trade maybe intraday, you scalp, you can see it's 4-hour too. So I feel that 4-hour is my opinion. Remember what I told you guys at the beginning of this call, that whatever I say should be verified, right? I'm not giving you a truth that is not negotiable. Whatever I say, take it to your chart and verify if it's true or not. I'm not asking you to buy or sell with anything I'm telling you, right? It's for educational what purposes. Okay. 4-hour is one of the best. So you can say, okay, 4-hour, I'm using 4-hour to do what? To use for my range. You can use 4-hour for your range. And then maybe if you can also use maybe 1 hour for what? Maybe intraday range, right? You have what to call overall range and then what to call intraday range or short-term range. You can use as your range or what short-term range, right? Because market is always fractal, right? You can use 1 hour maybe intraday or short-term range, but ideally the best time frame for range is what the 4-hour, right? So now let's understand this. Let's go to the rate charts and do some stuff, right? Let's use Euro USD. Let's go straight to the 4-hour chart. All right. I'm really loving this score. All right. So let's just go back a bit and understand the range. What do you mean by this range, right? So now let's start from somewhere around there. Let's go back. Let's just go back a very back. All right. So let's have something around there. Now, looking at this structure now, right? Can you see? Okay, now if I ask you, where is the dynamic low now? Remember I told you guys, the dynamic low is what? Obviously, is this low because it's from after this low formed, you can see what these big candles. Some might say this is dynamic low. Not really, because this low. Okay, let us just take it easy. Let's take it easy. Now, this low is a protected low because why it took out liquidity. Remember, I told you what I told you guys in the first call. This is why this you should watching the previous calls. This took out liquidity and then do what? Made what? A high. So it's what we call what? A protected low. So now let's work with this. If you bring out your flip tool, you can see that price came to what? Our discount level. Can you see how price came to discount level there? Right? It hit our discount level. I can see how what it bought what nicely before it finally was reversed, right? So the market did that. Now we saw the market break back bullish, right? Let us just do this one by one. So the market did that move, then made another low here, but I can't really see a liquidity grab here, right? Can't really see any clear liquidity grab here because this market is somehow it's not really clear liquidity grab here, just this push down and it's not very clear, right? So this is what I call an a weak low, right? You can see how this weak low was what violated, right? Because this low did not really give us. You can see this one. You can see this clear and then sharp push down. So this is not really give us that like very clearly, although it swept and then very fast move and then it's not very clear, right? So you can see market broke back bearish and below this low and then finally market resumed was bullish, right? Market closed above, went above this high, came back and then you can see how the market has been moving, right? um so let us start from here. Okay, and this is clearer now, so let's look at this point here. Now the market finally broke back bearish. One of the ways to know the market has broken bearish is that it start making what lower highs and lower lows, right? When you see the market is making lower highs and lower lows, like taking out making new highs and take out a low, there is obviously a sign of bearishness, right? So you can watch how this market has been printing from this swing high here to this low, right? You can see how price very, very trickish. Watch this. Take watch this, watch this, watch this. Just take watch something here. I want to point out something here. Now, watch something. You can see how price came and made this high. So you can see this high here. But watch something. This market, this particular high here, never came to what? A premium level. Can you see how this is a printing? You can see how this high here, it did not reach this premium level, right? It did not get up to 50%. That was why price later came back. So always be mindful. You can see how here failed to hit what this discount level. So price had to do what? Still push back up there and then what? Sold what? Properly. All right. You can realize the power of discount and premium. So imagine you maybe were selling here, you'd have lost this trade because why this was not up towards a premium what retracement. All right. So let's watch this one now. This swing high made a new low. So this is what happened again. So we can take it okay. Let's take it here. See how price came tap the first time, finally took out liquidity and then finally was broke to the downside, right? And then the rest has been history. The market is always changing structure, right? The same thing happened there. You can see a swing high here, and then you can see a swing low. So if you take it from here to here, you can see how price came here nicely. Right, watch this. So the same thing, let me get a 50% out just here. All right, so you can see how this high did not get up to 50%, it just dropped. All right, finally market finally was traded its way back to 50%, and then you can see how price was bouncing at the 50% level, kept bouncing here. You can see that this is actually what a kind of very serious level. You can see how price was bouncing at 50% level, just bounced, and then it was broke to the upside. All right, so that is it. So you identify trading range by this and wait for price to come back towards your 4-hour was this kind of premium social S, depending on what direction you're trading. But I can see that there was actually a bullish break here because this high actually took a liquidity before they was breaking lower, right? So there was actually a bullish break of structure. The markets went above this high. That was why the market continued, the other direction. So watch this again. We had the market, shift here. Okay, we had market structure shift here. And then what happened when that happened? You can see from this swing high, this is a dynamic high for me, and then you can see this low here, right? You can see this low here, right? Or let's use this one here. So you can see as price did not come to 50% here. That's why price still had to push back. But in cases where price didn't make up to 50% retracement, you simply do what? Either you leave it there or you extend it to the new low. So you can extend to the new low here, right? You're still using that same high because you only shift highs when that high was up to a premium level, right? So this did not make up the premium, so I had to shift it. You can see our price already came back to a very good premium level. This was a very nice sell because price did what came back to a very good premium level and then it dropped down. All right. The same thing happened there. You can see this is a dynamic high. And I won't use this low because this low is not really a good retracement, right? So I'll use this lower, this one here, because this was where we had a sharp retracement. Because our price from there came what good nicely into what a premium level, bounced there and then came twice, took out the blew out this liquidity and then what broke the downside. Because as we have got very good sales here. This is a forward chart, maybe because of good sales. This premium level here, maybe low. And remember that you have to use lower time frame to catch your sales. So you have got your sales here, then markets pushed above, took out this liquidity here, and then you have of course some more sales inside there. And that's how it dropped nicely. So the best sales always come from what discount and premium levels. And of course, we are not limited to 4 hour charts. I don't use 4 hour just for just to have a better picture of what price is. You can also use the daily too. Guys use daily too as well. But then you can see markets give a kind of bullish break here, and then you can see how the rest is history, right? Markets are buying from here. You had a bullish break here. Then if you drop your swing high to swing low, markets came, gave a discount opportunity, and then it bought, and all of those fun stuff. And market has been giving good retracements, blew out this liquidity here. This is a strong low, made a new high. The same thing. So this blew out liquidity here. This is strong low, made a new high, retraced, and all of this fun stuff. Right? Now the market is what is the market currently doing? Market is currently in a range, right? Market is currently in a range. You can see it's ranging between this zone, right? So there's no real direction now. Right? Market is currently in a range. So possibly because of the month end. So let us see what the market is going to do in the coming week, right? So I hope you're getting the point that the high probability sales happen in discount levels, sorry, in premium levels, right? So that's what all of this should be doing. Always make sure that your trades are always what on discount and premium. Now let's talk about the lower time frame aspect of this. So the lower time aspect of this is also the same too. If you're looking for a lower time frame entry, maybe market comes to a point of interest and gives you that that confirmation. Always wait for market to give what a premium level. Let's assume okay, I don't want to go too far because we have not talked about lower time frame entries, but just to give a little recap. For instance, maybe you have a point of interest here, and then price comes in the lower time frame, and then gives you what a bullish break, right? To confirm what your buys, right? It's always wise the same thing too. You bring out your Fibonacci 2 and then take it from swing high to swing low, and then what you have what your discount level, right? It's always wise to do it like this. You wait for price to come to the discount level before buying on the lower time frame as well, right? So let's just quickly go to a lower time frame chart and also verify this as well. So do how to backtest this for a long time to get it. So let's go to the lower time frame chart as well. So start this. All right, so you can see even on the lower time frame, I see having those beautiful ones, right? Watch this there, watch here. You can see how price, has been given those nice buys. So you can watch something here. You can see even on the 15 minutes chart. If you are buying this, you can see the swing. You can see the swing below. You can see the swing high. You can see how price came towards 50% of it, right? It came, came the first time and definitely was dropped very well, right? I'm using this high because this did not really give a good retracement. This was also where the good retracement occurred, right? So maybe you have been using this, right? Price not really, go deep into discounts, right? This is where I actually loved it. I can see how markets, took a liquidity and then there was, you can always extend your highs, right? The price does not really give a very clear, you can always extend your highs. You can always extend the high. You can hear for the first time, here was not really dynamic. So you can also take it to this point here and then like that. Right? So now if I want to do another one, like I can say, okay, from this low now to where this high, right? This now becomes what? Your next level, right? So can you see how price hits discount? You can see this little reaction there before it was finally do what reversed. Right? You can see even as it reversed, it just blew this liquidity low, tapped into this other block here, then what, continued higher. And you can see how these things are nice. So if you're looking for buys, the best buys are you look for are buys that happen at what, premium or discount levels. Imagine that maybe you're trying to buy here. Imagine that, okay, maybe you saw this now. You saw this bullish candle and you try to buy it, you'd have likely lost the trade because that is not a discount level. Imagine maybe you're trying to buy somewhere around there. Maybe you saw this candle now, and it's okay, it's a bullish candle, you try to buy it. You say you're taking a loss, right? So it's always best to look for price to come to a discount or a premium level before taking your buys or your sells, right? So it's very, very important, right? Very, very important. Even on the lower time frame. I'm talking to my paid students now. Lower time frames, if you see a break of structure, it's always best to wait for the market to come down to a premium level, right? If you see confirmation on the lower time frame, wait, maybe you want to take a fair value gap entry, want to take an order block entry, want to take an imbalance entry, want to take a breaker entry. It's always nice that it aligns with what, a premium or discount level. All right. So this is why we end today's call. Tomorrow we'll continue. And this is all about the introductory part of market structure. So as we continue tomorrow, we'll talk more in details, right? So have a wonderful day. If you learned something from this video, do what to like, subscribe, and share with your friends, right? Don't forget to participate in that giveaway. What I said earlier, just watch the beginning part of this video. I told you guys something about discount and premium levels, and I said that you guys should do some kind of screenshot or you know tell me buy at discount, sell at premium. Just tag me, whatever, anyhow you feel to do it. Type it in the comment section or others, right? Also, if you want to purchase a Profem account, I'm actually a Profem partner with FUNDEDNEXT. So if you need help, maybe purchasing your account, you need someone to assist you, or you need to get a discount code, you can just use the link, my link in the description to get your FUNDEDNEXT account, right? FUNDEDNEXT is legit and it's a firm I use even up to date. I have my own account which I bought with my money with them, right? So I can vouch for them. They're actually a good firm. And if you want to use them, just use the link in the description and join us, right? So have a wonderful day. See you guys in tomorrow's teaching. Cheers and God bless.